So you applied for an accounting position to work for me, and I'm gonna give you a series of assignments to test your accounting knowledge. These assignments are gonna range from easy to difficult. So for those who are watching this video that are accounting heavyweights, you're gonna wanna stick around till the end. What kind of assignments we're talking about here? Well, the first one is gonna be around revenue recognition. The second one is an expense recognition assignment, and the third one is somewhere in between. So let's take a look. And if you want to sharpen your accounting knowledge, you're going to want to check out my accounting programs. I'll leave a link down below in the description. But without further ado, let's dive into today's assignments. All right, assignment number 1. Your company, Squid Inc., is in the software business and sells software as a service. In January of 2023, this is the current year, Squid invoiced its customer $1.4 million. Of that amount, $200,000 was related to services delivered in the current month in January 2023, and $1.2 million was related to a platform fee for the entire year 2023. Now, the question is, write the debits and credits for these transactions. Okay, let's take a look here. So the company invoiced the client $1.4 million. $200,000 of it was for services already delivered in the current month. So we are going to record the revenue in January 2023 because we already delivered the service for this. Now, we invoiced an additional $1.2 million for a full year of platform fee paid in advance. So you will have to divide this $1.2 million over 12 months. The current amount of it, which is $100,000, is revenue in January, and the rest, $1.1 million, is deferred revenue. Well, what is deferred revenue? Deferred revenue is money received for goods or services which has not yet been earned, right? So we all know that revenue should be recorded when earned. We have not earned the 11-month worth of service in this case, so we're going to defer the recording of this revenue. So the summary of it is that January will get revenue of $200,000 plus $100,000 out of the $1.2 million, and then the remainder of the $1.2 million will get divided over the subsequent 11 months. So let's go ahead and write our answer for assignment number 1, and I'm going to leave a link to this Excel file here so you can download it and go ahead and practice your knowledge in accounting. But the answer will go that in January of 2023, we are going to record a debit to accounts receivable for the $200,000 and a credit to revenue for $200,000 as well. And for the deferred revenue piece, we also will have a debit to accounts receivable of $1.2 million and a credit to deferred revenue, which is a liability account. Why is it a liability account? It's because you receive this money for a service you will deliver in the future. Therefore, you're liable to deliver this service in the future. It's a liability. So deferred revenue for $1.2 million. And then we'll go ahead and recognize $100,000 out of this $1.2 million in the current month. So the debit in this case will be for deferred revenue, reducing your liability, and credit to revenue to recognizing a portion of that amount. This is going to be for $100,000. Same for the credit side. All right, let's move on to assignment number 2, which is an expense recognition assignment. Your company, Squid Inc., same company, is in the software business and will be holding a conference in January of 2024. Current customers are invited to speak about their experience working with your company. The purpose of the event is to generate more interest and leads for the business. Leading up to the event, Squid Inc. pays in July 2023, which is the current month, pays $50,000 reservation fee for the event hall, right? You need a hall to hold your conference, and $30,000 for the staging company for lighting, stage prep, etc., all the things that go into making a conference. The question is, write the debits and credit for these transactions. Okay, let's take a look at this. So what we got is the vendor is performing a service in the current period, which is July of 2023. But the conference is in the future of January 2023. So then the question becomes, what I'm trying to test you here is whether you should recognize the expense in July, in the current month where the vendor delivered the service to you, or when the conference takes place in the future in January 2024. So the accrual principle would require the recording of the expense in the same month as the vendor performs the service. In this case, the vendor performed the service in this current month, in July 2023. So the accrual principle would say you recorded in the month where the vendor delivered the service to you. However, the matching principle would require the recording of the expense in the same month as the revenue is generated. Now, in this case, when you hold a conference, you won't be delivering or you won't be generating revenue right away, right? The revenue is going to come in the future from the leads you're generating in this conference. So in this case, it's not revenue that's being generated. The benefit here is being received in January 2024, and it's not revenue, it's leads that will deliver revenue in the future. So in this case, we have two accounting principles that are opposing each other, and the accountant will need to use his or her professional judgment. That's why we have accountants, right? For professional judgment as to which principle to apply in this case. The matching principle seems more objective here as it aligns the expense with the benefit generated from the event. So let's go ahead and write the debits and credits for the expense recognition. So in the current period where the vendor sends an invoice and we potentially pay for this invoice, the debit is going to be to prepaid expense, and the credit is to accounts payable for the amount of $80,000. And once you pay that amount, say in August of 2023, you are gonna debit accounts payable and credit cash as the cash goes out the door for the same amount, $80,000. Now comes January of 2024, you are gonna go ahead and remove the prepaid expense and recognize the actual expense. So you're gonna debit marketing expense and credit to prepaid expense for the amount of $80,000, and that will close out the transaction. Now, moving on to assignment number 3. Assignment number 3 has the same fact pattern as assignment number 2, with a company recording prepaid for the expense that it paid to vendor for the conference. However, the added detail here is that in January of 2024, the company sells $20,000 worth of tickets to those who want to learn from the conference. So the company is selling tickets now for attendees of the conference. Let's take a look at it. Since the ticket sales is not the company's main business, remember, this is a software company. It's not in the business of holding conferences and selling tickets. It's in the business of selling software. In this case, this is not revenue. It cannot be recorded as revenue because it's not the company's main business. Now, so this can be recorded in two ways. Either as an other income below operating section of the income statement, or as an offset or reduction to event expense. So if we choose to go with the route of recording it as an other income, it will go here under operating income on the income statement. So let's go ahead and write the debits and credits for this transaction. So our financial period is January 2024, and we have two choices. The first one is either debit to cash. In both cases, there will be a debit to cash for $20,000 and a credit to other income for $20,000, or we can do so, or option 2, debit to also cash $20,000 and credit to marketing expense, reducing the overall cost for this event on the P&L for $20,000. So two choices here, either one will be a valid option. And that's all I got for today. Thank you so much for watching. If you have other challenging accounting interview questions that you've seen in the past, go ahead and leave it in the comment section below. And if you liked the video, give it a big thumbs up, and I'll see you in the next one.